Greetings, single point clients and friends. Here we are, another quarter. So let's start with a brief overview of the markets and the economy. I think overall it was a fairly boring quarter. The markets were generally flat, maybe slightly up. The bond market was actually a little bit stronger than the equity market. Overall, client portfolios were up modestly. Through the first 9 months of the year, we still stand at double-digit returns for U.S. stock market, probably around 18 or 19%, and about 8% or so for the bond market through the first 3 quarters of the year. But today, what I really want to spend a little bit more time on is some news that have recently come out which have an impact on the way that we invest money for our clients and which impact your portfolios. And what I'm referring to is a headline that came out about a week ago from Schwab indicating that they, as one of the 3 largest custodians for brokerage accounts, were actually going to be reducing their trading commissions to 0. They'd already dropped significantly down to $5. Fidelity had matched it. As you know, we use Fidelity, so obviously we keep very close tabs on the trading costs. And now it's basically a price war, and it's all to the benefit of the investor, which is fantastic news, right? So we see Schwab starting with an advertising campaign saying they're dropping to 0. Shortly thereafter, TD Ameritrade followed. Shortly thereafter, Fidelity followed. So we're very pleased about that. That's given rise to some questions occasionally around, yeah, how does Fidelity make money then if they're not charging trading commissions? So the short answer is that the custody services that the Fidelities and the Schwabs provide is actually has multiple revenue sources. It's a fairly complex operation. They'll make money on what's known as the float. What's the float? That's the residual cash that tends to build up in client accounts in between trades, and that cash obviously earns an interest rate. And some of the custodians have a revenue model where they will pay a lower interest rate on those cash balances, turn around and lend it through their banking companies, through their banking subsidiaries, and earn a spread on that, right? So that's one way in which they make money, and it's a significant way and an increasingly important way to make money. The second way that they make money is through revenue share agreements with the ETF companies like BlackRock or other mutual fund companies as well. So in your particular case, we are heavy users of BlackRock. They have some of the lowest cost index funds that that we favor. And of those expense ratios that BlackRock earns from putting together those funds, they share a little bit of that with Fidelity. And that's the second way in which the custodians tend to make money. And that's obviously, a very important revenue source for them, and one that we watch like a hawk. As you know, the philosophy here at Single Point is to make sure that we are getting you the market return with the lowest possible fee and tax impact. And so we want to stay very focused not just on the trading commissions, which, by the way, those BlackRock funds were exempt from already from many years ago, so you haven't been paying trading commissions on those. But certainly for clients that do have individual stocks, and we do have a fair amount of those, as we work our way out of those positions, we're now going to be able to save you $5 a trade each time that we sell out of those positions. So it's a net positive for our clients. But the more important point that I'm trying to make here is we understand the different ways in which the custodians earn their money. And we want to understand the full cost of investing for our clients. And you should rest easy knowing that we have a system and a process to keep track of all those 3 different components of their revenue, such that if at some point it becomes important for us to consider using a different custodian, and we're very happy with Fidelity as the primary custodian today, but if at some point the economics of Schwab or TD Ameritrade improve and are better, taking into consideration those 3 elements, then we will obviously take some action to do that, because that's what we're here to do. We're trying to drive the cost down, and it's not what you make, it's what you keep. And that's the key message today, this third quarter. I appreciate your time. I hope this was helpful. Until next time, Rene Jarquin.